Yesterday, the euro slid a bit, weighed down by data on business activity in the euro area, indicating contraction in the manufacturing sector amid high energy prices and still elevated inflation. In late trade, the euro reversed and gained upside momentum. Today, much will depend on the news. On Friday, all eyes will be on the U.S. non-farm payrolls report. The American job market has been on the rise since the beginning of the year. Non-farm payrolls increased by 229,000 in January, 270,000 in February, and 303,000 in March. The April report is expected to show that U.S. economy added 243,000 jobs last month. If the indicator comes in below market expectations, the riskier assets will have a chance of extending gains. If the number of jobs is above consensus estimates, it will signal a potential spike in inflation due to strong labor market conditions as well as increased household income and consumer spending. In this case, the U.S. Federal Reserve is likely to hold interest rates at a high level for longer than anticipated. If the euro and British pound held steady after the third meeting on Wednesday, today's U.S. jobs data is likely to put heavy pressure on the riskier assets. In addition, the U.S. unemployment rate is due out today. The indicator is expected to remain unchanged. Traders may also take notice of data on U.S. average hourly earnings. Furthermore, traders will receive statistics on U.S. business activity in the services sector. Recall that recent data showed the U.S. manufacturing contracted in April. If services industry activity also slumps, it would mean that high interest rates are intensifying the challenges for the U.S. economy and could turn into a major headache for the central bank. Thus, today's reports will be of great importance to market participants. From a technical perspective, the 1-hour chart shows that the euro-dollar pair is trading between the levels of 0.751 and 1.0779. Weak data on the U.S. labor market would enable the European currency to get out of the range. If the price breaks above 1.0751 and tested from the top down, the volume of long positions will increase. A buy signal will also be generated if the price forms a false breakout at 1.0714. The euro will then move towards 1.0779 and 1.0804. Moreover, in case of gloomy data from the United States, a surge to 1.0829 is possible. At the levels of 0.804 and 0.829, I recommend going short on the rebound to catch an intraday correction of 25-30 pips. Short positions at 1.0779 and 0.751 can only be considered on the false breakout. If pairs regain control of 0.714 supported by strong U.S. jobs data, the euro is expected to dip to 1.0677. A false breakout at this mark will make it possible to open long positions. Going long on the rebound will only be relevant at 1.0642 or 0.601. In this case, one can count on a 35-40 pip move. Likewise, the British pound is trading sideways. A false breakout at 1.2532 will create a buy signal, driving sterling up to the 1.2565 mark. If the price breaks above this level and tested from the top down, the pound-dollar pair will extend gains. In the event of weak U.S. statistics, the pound sterling is likely to break above 26.10 and 26.57. At the level of 1.2657, traders are recommended to go short on the rebound, expecting a decline of 35-40 pips. Short positions at 1.2610 and 25.65 can only be opened under false breakout. If U.S. data disappoints traders and the price breaks through and fixes below 25.32, a sell signal will be generated, with sterling diving to 1.2503 and 24.67. At the mark of 24.67, it would be wise to go long on a rebound to catch an intraday correction of 25.30 pips. Going long at 1.2503 and 25.32 will be a good solution in case of a false breakout. Good luck and have a nice weekend.